Hi guys, this is Alan from Hirose Financial. How are you today? Welcome to the Friday Forex Corner. So in today's video, I'm gonna show you how do you actually calculate pip value for each pips. So this is pretty important because you can use this to set your profit goal, and then you can use it for your risk management in the forex trading as well. So after I explain the pip value calculation, I will move on to a forex trading strategy. So it's a strategy that is made for beginners. So even if you don't know anything in forex market, but if you use this strategy, you can actually make a little bit of profit each day if you follow the strategy. So this strategy doesn't require you to use any technical indicators, and all you need to do is just to enter the market at a specific time on each day. So by doing that, you will be able to make a little bit of profit day by day if you use this strategy. So just try to follow the video until the end, because I will talk about the strategy at the end of this video. Okay, so before I get to start today's topic, let's do a quick review on what we learned from last week's lesson. So in forex trading, the profit is depending on the price difference, and the price difference is depending on the pips. So the more pips you have, the more profits you are gonna get in forex trading. So okay, so let's do a quick review on this on this matter here. So first, in forex market, there are two different types of currency pairs. So one is with Japanese yen, and the other one is without Japanese yen. So both of these currency pairs have the same, can be calculated as the same. So for the ones that is with Japanese yen, for example, US dollar and Japanese yen. So if the price is this much here, so the first pip in here can be calculated from the number 2, and similar to the one that is without Japanese yen. So for example, euro and US dollar. So for this price here, the first pip is calculated from the number 5. So so it's from the second last digit. So for both type of currency pairs, the first pip is calculated from the second last digit of the price. Okay, so if I let's say if I traded US dollar and Japanese yen, and I expected the price to go up, so I opened a trade when the price is this much here, and when the price becomes this much here, I closed the trade. So now in here, these two price, the difference is 1 pip. So if I traded 100,000 units, then each pip's value is gonna be around roughly around $8.90. So so next we'll take a look at what happened if we trade in US dollar and Japanese yen. Euro and US dollar. So if the same as just now. So if I expected the price to go up, then I opened a trade when the price is this much here, and I closed the trade when the price becomes this much. So in here, the price difference is 1 pip as well. So if I traded with the same trade volume, which is 100,000 units, then each pip's value is gonna be around $10. So now you might have a question here. So we traded the same volume on both of the currency pairs, and both of the currency pairs moved by 1 pips. But then why the pip value is different? So this is what we're gonna talk about today in today's lesson. Alright, so there are two factors that is affecting the pip value. So the first is the currency pairs that you're trading with, and the second is the trade volume of your trade. So let's talk about currency pairs first. So it's okay not to think too difficult. Let's take US dollar and Japanese yen as an example. So the meaning of this currency pair is actually we are using Japanese yen to buy US dollar. So as price here is that indicates how much Japanese yen I need in order to buy $1. So that price, the 112.250 there is the price that I need, the Japanese yen that I need to in order to exchange $1. So well, it's the same when it comes to euro and US dollar. So in here, that means that I'm using US dollar to buy euro. So that price here indicates the price, the US dollar that I need in order to buy €1. So because the exchange rate for each currency pairs is different, for each currency is different, so that's why the pip value for each currency pairs is different as well. So it's pretty simple and straightforward because the currency is different, so the pip value is different as well. Okay, so well, next let's take a look at the trade volume. So well, I've mentioned it quite many times. So in Forex trading, the more you trade, the more trade volume you have in your trade, the more profit you're gonna get. So well, that's pretty similar with when we are going to currency exchange in the airport. So let's take US dollar and Indonesia rupiah as an example. So let's say I'm using US dollar to exchange Indonesia rupiah. So I exchange Indonesia rupiah when the price is 14,000. So $1 is equal to 14,000 Indonesia rupiah. So I exchange Indonesia rupiah at that time, and then the price went up, and then it becomes 15,000 now. So I decided to change my dollar into change my Indonesia rupiah back to dollar. So that is the difference in this chart here, is the difference of when I exchange $1 and when I exchange $1,000. So the profit that I'm gonna get is gonna be a huge difference as well. So that's why I've always been saying, the more you put in, the more you will get in return. So the unit that we are using in Forex trading to count trade volume is lot. So lot is the unit that we use to calculate trade volume in the Forex market. So well, one lot in here, well, one standard lot here is it has 100,000 units. So when we trade with US dollar and Japanese yen, one lot is $100,000, and when we trade with euro and US dollar, one lot is going to be 100,000 euro. So in this table here is the sum of the most traded lot size that we use in the Forex market. So in here, one standard lot is 100,000 units, and the margin requirement, the actual fund that you're going to trade with, is going to be roughly around $1,000. So we do have a mini lot that is a 0.1 standard lot, and that is 10,000 units. So that the margin requirement is going to be roughly around $100. So and we have a even smaller one, and that's a micro lot, that's 0.01 standard lot, that is 1,000 units. So the margin requirement is going to be roughly around $10. So okay, so well, now we know currency pairs and trade volume, so that is actually able to help us to calculate the pip value. So next, we'll take a look at how we're gonna use these two factors to calculate pip value. Right, so well, there is actually a formula for you to calculate pip value. So we use lot, the contract size, and the pip size. So well, that might be a bit troublesome for you to use that formula every time. So I do have a more simpler tool for you to calculate pip value, which is this one here. So it's pretty simple. So let's take US dollar and Japanese yen as an example. Let's say if I trade US dollar and Japanese yen. So in the currency pairs here, we will choose US dollar and Japanese yen. So just choose US dollar and Japanese yen. So that's the one that we're gonna trade with. So next, in this ask price here, so in this one here, we actually need to look at the platform. So let's open up the MetaTrader 4. Okay, let me open up my platform. So here is the MetaTrader 4 platform. So when you open the platform, you will see a chart like this. So in here, just make sure you are looking at US dollar and Japanese yen, because that's the one we are calculating. So now we will click on this little triangle here. So once we click on it, we will see two prices: a price for sell and a price for buy. So the ask price in the pages now is the price for buy. So we'll enter this price in the ask price. So it's 104.35. So okay, we will enter this price in the ask price. So 104.351. So it doesn't have to be exactly the same as the current price. So roughly around this is okay. So now we entered the ask price. Next, we move on to the position size. So that's the unit, that's the trade volume that we talked about just now. So now, let's say I want to trade one lot. So one lot, as I mentioned just now, is 100,000 units. So I will enter 100,000 here. So okay, so that is 100,000. So next, I will choose my the account currency. So well, that is your base currency of your account. So let's say my account currency is the base currency is US dollar. So I select US dollar here. So, or if you have euro, you can select euro as well. So for now, I will leave it to US dollar. So after we get all this filled in, we can click on calculate. And now, just a split second, I do have my Pip value here. So in this case here, if I traded one lot, which is 100,000 units, so for US dollar and Japanese yen, so one pip, each pip's value is equal to $9.58. So that is how you calculate Pip value, and that's pretty simple with these two here. So if the pip moved by 100 pips, then the profit that I'm gonna get with this calculation here is roughly around $960. So that's how I calculate pips. So you can try it out this too. I posted the link of this page at the bottom of the description. So go and check it out, and I'm pretty sure it's gonna make your life so much easier with this tool. So well, just to keep in mind that the Pip calculation is not only able to help you to calculate profits and set your profit goals, it can actually help you to do a risk management as well for your trades. So well, for risk management and profit goal, I will actually talk about it in the later videos. So for now, as long as you know about these tools and you know how to use it, that's good. That's good enough. So well, next, let's move on to the today's strategy. A strategy that is able to help beginners to make profit in the first market. So well, it's a really simple strategy, and I can actually sum up this strategy with just 3 points. So which is to buy US dollar and Japanese yen at 12:55 GMT. So that's it, that's the point, that's everything that you need to know about this strategy. So well, it might not sound convincing for you. So well, let's take a look at a few examples that I get from the past week at the US dollar and Japanese yen movement at 12:55 GMT in midnight. So well, let's take a look at this chart here. This is the chart that I took on 9th December. So in here, it's a 5 minutes chart. So the movement here is worth of 5 minutes. So in 5 minutes, it moved 0.7 pips, and then next day, on the previous day, on the 8th of December, it moved 0.9 pip in 5 minutes, and then 7th, 0.5 pip, and then 4th, 0.5 pips, and then the 3rd in here, it didn't actually move at the end, so it's a 0 pip here. So on the 2nd of December, there's quite a lot here. So it moved 4.6 pips. So in total here, in the past 5 days trading session, the total pip movement is actually 7.2 pips. So if we use the calculation just now, the pip value calculation, so if I traded one lot in US dollar and Japanese yen, so the pip value, each pip value is gonna be roughly around $9.60. So as if we traded in the past week, and if the price moved by 7.2 pips, then the profit that we're gonna get is gonna be around $69. So every day in 1 week, so you spend 5 minutes each day on your trades, and you are gonna get around $69 in 1 week. So well, that might not sound much, but then let's take a look at what happened if we spend 10 minutes each day for our first trading. So that's the same chart here, is the 5 minutes chart. So on the 9th of December, so in 10 minutes, US dollar and Japanese yen moved by 1.2 pips. So on the 8th of December, it moved by 2.6 pips. 7th, it moved by 2.5 pips. 4th, 1.3 pips, and third, it didn't actually move again. So well. But then on the second, it actually dropped down a little bit, so now it became 2.7 pips. So well, use the same calculation. So the total pip here we have is a 10.3 pips. So if we use the pip value calculation, each pip is roughly around $9.60. So if we multiply by 10.3, then the profit that we're gonna get is gonna be roughly around $96. So well, it still might not sound much to you, but then just imagine you don't know much about forex trading, but then if you spend 5 to 10 minutes on your forex trading at 12:55 GMT in midnight, then you're gonna get roughly around $100 each week. So that's quite promising based on the fact that you don't know much about forex trading. So well, that's it about the strategy, and it actually it's a really simple strategy, but then it has had a theory behind this strategy, which is based on the working culture in Japan. So that is a actual strategy that we use in the forex trading, and is quite popular in Japan over here. So if you are interested in this strategy, and if you want to find out more about this strategy, make sure to follow the next video on next Friday, which I will give a more detailed explanation and talk about the theory behind this strategy. And well, for now, take a look at US dollar and Japanese yen 12:55 GMT, and then take a look at how it moved and see whether it really works at 12:55 GMT. So well, that's pretty much it for today, I'm guessing. So if you do have any question on pip value calculation, or in regards to this strategy that I talked about, just feel free to leave me a comment down there, and I can get back to you with an answer. So well, I will see you again next week. So if you like my video, give me a like and subscribe to my channel for more live trading video, and I will see you soon again next week. Bye.